Yes, it all makes sense. The market is in a mode of fear right now as we're hitting all-time highs, which is a long time in the S&P 500. But fear, it brings on opportunities. You just need to know where to look. And that's what we're going to talk about on today's Stock Market Brief show. And obviously much more. Now, why would we be getting a reading of fear on the Fear and Greed Index by CNN? Well, there's a couple of indicators that it aggregates, a total of 7, and 2 of which are in extreme fear. And those 2 are net new 52-week highs and lows on the New York Stock Exchange. So as the market has been pressing higher, fewer and fewer names have been going up. We've been talking about bifurcation and stock market breadth. Another way to look at stock market breadth is the McClellan Volume Summation Index. So we'll pull up the Nasdaq Summation Index and give you a close reading there too as well. But if we look at something like the high lows on the NYSE, you can see the cumulative high lows on the NYSE line right over here. It's meagering around right over here. And you can see the price of the New York Stock Exchange. Definitely there is that divergence. And what we've been talking about is a lot of divergences that are building. You can also look at US new high, new lows, and this is even more weaker. As you can see, the market has been continuing its press higher. The Summation Index, too, has identified a potential change in trend, and it's still going down as the market presses further. And the Nasdaq McClellan Oscillator down here, you can also see that we've been getting readings under 0. So as the market's pressing higher, the internals are weakening, which means one of 2 things. It means that this could be just a fake-out type move, and we'll move into an oversold condition incredibly fast. And or this means that there's going to be a lot of a catch-up trade, so to speak, to resolve this divergence, because these divergences, they do, in fact, resolve. We've been talking about the 50-day moving average, the percent of stocks above it, and the percent of stocks above the 200-day moving average, and those have been continuing to diverge. However, right, we've been finally seeing today, we saw a little bit of market breadth come in, right? We had in the S&P 100, we had 73 advancing issues versus 28. So are we now potentially going to get a little bit of love in the names that have been falling? And yes, they have been falling. Just take a look here at a month-to-date heat map. You can basically split this thing right down the center, and it's all the big squares that have been getting the love, mainly tech, and everything else has been red, oh, red, oh, red, oh, red indeed. Take a look over here at small caps. Well, that's not really small caps. It's growth versus value, okay? So we're measuring the 2 against each other. IWF is Russell Growth, and then IWD is Russell Value. And what you'll see here is we've seen this thing break out, okay? That means that growth is outperforming value by a very, very, very large margin here. Which means sometimes these things get extended, which is going to the point of where we may see that rotation back in and this trade to kind of subside a little bit. And you can also see that here a couple of times dating back. There have been periods of times where it gets overextended to the upside and then this line starts to sink back down. We've been seeing times where you get extensions like over here going into 2021, right? We had that divergence. You also see things like positive divergences too play out as well, including right here at that October 23rd, going into the 2023 bottom right over here on this line. So you can see we're getting a reading that we haven't seen for quite some time, which is the rate of change, the 10-day rate of change between these 2 assets. And the RSI is getting rather frothy, meaning that we could very well come to some sort of a period of consolidation here in the very near future. And we have more information on why that could potentially be the case. Overall today, consumer discretionary led the way and technology, so another risk on type of day, and utilities, which is more of a risk off play, came down there towards the lower end. It is the worst performing sector on today's trading session. And then you can see over here, the index products, the Nasdaq was up 0.95%, and then small caps was up 0.92%. So both broad markets over here started to see a little bit of love. And then you have the tech that led the way, which is the Nasdaq 100. And what really drove today's price action? Well, if you were watching our live stream, right? Market net flow was incredibly bullish throughout the entire trading session, and it didn't wane until really over here and at the end of the trading session, which drove the market, the white line, continually up higher when you have those bullish divergences with bullish convergence. Alrighty, and where did the market go to? It almost came right into that key level of 5,500. This is where traders are focused. This is where the market can get pinned. This has been the level that we've been talking about where the market can stall between 5,400 and 5,500, this 100-point range kind of floating around in there. We're now towards, the upper end of this, and I'll show you a chart momentarily. So a key level to obviously watch is going to be 5,400 as your support, right? And 5,450, if we can hold above that, the target would remain 5,500. And if traders aren't going to reach out further, this is where price action can get pinned at. Okay, you can take a look here. The market really did go pretty nicely today in a pretty straight shot, and it tagged into the 2 standard deviation daily move. And that's where we found a little bit of resistance coming off towards the end of the trading session. And we almost tagged the upper weekly expected move in the SPY. That's at 549.42, and it's only day one. Mind you, if we do come up here, which is likely, we're not too far off, if we do get up into this range, we're also above the month to date. And this is where I typically look to really reduce portfolio size, take some profits, update stops, whatever the case may be, even potentially look to hedge various names that have been going absolutely insane amongst obviously looking for stocks that might be rotated into if the market pauses out. So as you see here, we saw this pretty solid breakout of this consolidation over here, and we came into and around 5,500 today. I thought it was going to be crazy if we made it up there. We darn near basically did. All right, this is over a $5,000 product, and we basically come into that level. So now we're just kind of consolidating up in here. We'll see how it resolves and how it consolidates, but it's going to be important to keep a very close eye on 5,500. Obviously 5,450, which is down here. So if price wants to make its way down here, this could be a back test of this breakout area, and you'd want to see that hold. If we start getting below, you'd want it to hold 5,400. So all signs are still green for the market, right? But things could be a little frothy here as we're reaching into one of these levels that price can very well get pinned at. Okay, if you take a look at the updated daily expected move, it's 549.89 to the upside. To the downside is 544.31. That's the SPY on the 15-minute chart. And we are holding above a rising 5-day moving average. We're in positive gamma territory. This is where, the short-term trend is positive, and then also dealers look to buy the dip, sell the rip. Okay, so if we come down into and around 544.31, that, we'll see what the 5-day moving average does in that time. That's where I'd be looking at. And then also that'd be coming back into and around the month-to-date expected move as well, which it's only the 17th, right, today, and we're just outside of it. We did this last month too. Now, why do I think that we could potentially come in a little bit in the market? Well, or not go as high and start to digest still. Why do I still believe that? Well, it's because of that gamma level, the 5,500. And then 2, we're starting to see a little divergence here between the smart money, HYG, and the dumb money, SPY again. And we've been calling out these divergences time and time again, and they end up typically resolving themselves. And I constantly just kind of watch and monitor and see how it plays out eventually. But you can see over here, there's a bullish divergence, meaning that smart money was putting in a higher high, and the dumb money, right, was freaking out and putting in a new low, and that led to a nice market rally, and it gave us insight. The smart money said, hey, yeah, it might be a time to start to get in, and we've rallied that since that point. Then over here, you can see multiple divergences. This one we called out on stream and also on the show, where we saw the higher high, but then SPY freaked out, and that led to a nicer rally. And then the shorter term, we talked about this divergence, and it started rolling over, all right? But while that was happening, well, what was HYG doing? HYG was actually going higher, and then SPY was going lower, and that led to what? It led to the SPY rallying to where it's at. Now where are we? Well, take a look. SPY at a new all-time high. What's HYG doing? HYG is currently putting in a lower high. So this can resolve of one of two ways. HYG can come up and break this divergence because it is a small divergence, and or SPY can resolve itself to the downside, doing a catch-up trade down there to HYG. So that's a current divergence that is building. Another thing to pay attention to is the larger time frame on the SPX, the weekly time frame. There is a RSI divergence, which just tells us that as the market's pressing higher into this important gamma level, right, it's also doing so on weaker internals, a weaker reading on the relative strength index, right? So we have a high, lower high, price action went higher, and we've seen things like positive divergences like right here into the October bottom, rally to another high. We've seen multiple divergences in the past. You can see that built out over time. Right over here, it led to this sell-off, this little divergence here. Happened to be right around the pandemic, so you can consider that working or not, or one-off, I don't really care, but it was a divergence. And then you had this divergence right here too as well, that resolved itself there. And now we have this one currently building. So you'd want to see this actually start to see weakness and see if it resolves itself from that point. Let's take a look at the 10-year yield and then also oil. The 10-year yield did see a little bit of a bid today. And this could be following the path of oil, right? As oil has typically led the 10-year yield in recent trade here, where it fell and then the yield fell after, it rose and then the yield rose after. And then oil fell and then the 10-year yield fell there shortly after. Well, now we're getting a bid in oil. Is this going to sustain itself? And if so, is the 10-year yield going to continue to follow through? Maybe kind of come back into this trading range up here at about 4.45 on the 10-year yield. If that is the case, it might be worth, obviously, paying closer attention to the correlation that a rising yield has on the market. The 10-day correlation that the S&P 500 has on the market is actually deeply negative, which suggests what? It means that if the 10-year yield, or sorry, if the long-term treasury yield rises, typically means the market could come down in the shorter term. That's what a negative correlation means. Okay, and then on the flip side of that, if you also want to look at things that are correlated to rising oil, it could be something like energy names. And if you take a look at the bullish percent index for energy, this has been getting pretty slammed here, right? And it's not quite down here towards 40 where we saw some bounces before, but the RSI has been oversold, and we pointed this out a few times. But as this is kind of coming off into and around these levels where we did find some bounces prior, I wanted to look at just the absolute ETF right now, so XLE. And if I just measured, from the low to this swing high, this right here is known as the golden zone, meaning that you have a 50% retracement of this run up right to here, and this is the 61.8% retracement. So if you like fib levels, we're kind of coming right into that golden zone there for the fib, and it's also in confluence with the lower trend here that we've seen bounces from, and it's fluttering right around the 200-day moving average. So you can get in early, and or if you're a more patient trader or that you want more confirmation, you can go into like the 15-minute time frame, apply a 130-day moving average, 130 period moving average, which ends up being around the 5-day. And you wait to see the 5-day start to level out and then start to turn up and price actually put in higher lows on a smaller time frame to confirm maybe that we might be moving up higher. A couple of names within that is CVX, right? So Chevron's been getting hit pretty hard. If you looked actually at the heat map that I showed earlier right here, look at XOM. This is a month-to-date performance, down 8%. Chevron down 5%, right? So if we're going to get a more broad-based rally, perhaps they come back into the energy names and we get a little relief on names like this. So CVX is coming into its golden zone right over here. And then also XOM has been seeing some pretty significant sell side cracking well under the 200-day moving average today, right? Following through. And it's just in that zone right there, which happens to be the 50% to 61%. 61.8% retracement level. This is that golden zone right there. So what I said earlier, right, remains the same on these names too. You can see if it turns around and potentially we get some sort of strength, and you can watch the 5-day moving average to confirm that. Okay, we'll hop into a couple of other names here that look like they can be ready for a bounce. This is one that I shared just this weekend with my Discord group. If you're not part of the Discord group, you can sign up through Patreon. It's only $9 a month, or you just do it annually, pay for an entire year. It ends up being like $7 a month. I give a lot of data. I give a lot of charts for a very, very low cost. It's not an alert service, but it is, it's just a lot of information, right? And there's also ways you can research stuff, including the whole Tradie Tick suite. But FDX was a chart that was kind of on my radar because it was going into a prior area of support. And we did get some follow through today. We'll see if it continues, potentially breaks up through this trend line. But I even broke into like the 15-minute time frame. So if you want to see that kind of walk through it's in the trade ideas tab. So you can go in there and take a quick little gander there. Actually, it wasn't FDX that I did the smaller time frame. I think that was Dell. And I don't have that chart in front of me, but Dell played out, I think, pretty well just today. It played out pretty well. And I think I shared that chart on, 613. Yeah, 613. So FDX is pulling into an area of prior support, and I have that channel if you want to take a look at it there, or ask me on a live stream and I'll try to pull it up. Beyond also is one that's been completely hammered. So I'm looking for names that they might rotate back into. And this could be potentially one. It's been completely thrashed. When I take a counter trend bet like BYON, I'm looking for like a little pop. I'm not looking for like this. I'm not looking for a move way up here because it's going up against the trend. But sometimes you'll get a nice little pop, and it makes for a good little quick trade. So zoom into the 15-minute time frame, see how it shapes up. But yeah, today we saw some decent volume, and it was slightly down on the day, but we did recover quite a bit. So it's going to be interesting to see how that one plays out. And then CELH was another one that you have this double top and it broke down for a confirmation. And a lot of the times we actually get, we go for a back test. So I'm setting up right now, I'm positioning into it for a potential back test. I might get taken out. So I had, and by the way, when I take positions in names that have been getting beaten down like this, they're tiny positions, okay? Why? Because you're fighting the trend. You're going for a counter trend bet. But yeah, this would be one that I'd be looking for a potential bounce here too. Names, if you don't want things that to go into names and try to find bounces, because you have to be very, very good at position sizing and scaling in, approaching it in a whole different manner than most type of way that you'd approach it for breakout trading. But here are some names too from the tight list. The tight list is something that I also share once a week, and you get access to obviously all the names that are coiling up that are kind of on my radar. So Halo, Halo, the reason why I'm just bringing this to your attention is because it is just flagging here. So you have an earnings move, and now it's consolidating here with tighter volume. So perhaps it's gearing up to go retest these highs over there. You have IP, which is international paper, consolidating or flagging right here, getting pretty tight in bullish context as well. And these type of names are gearing up for a potential move. Whether that's to the upside or downside, I don't know. Okay, but what it is telling me here is that when volatility contracts, the next thing to do is for it to expand. Now, it's being that it's in bullish context, you would think that you get trend continuation to the upside. That would be the idea behind it for trend continuation. UHS is also kind of in this Darvis box in bullish context here too as well, trading around that 190. Okay, we got Burroughs Coffee had a nice breakout over here on strong volume, and now we've been kind of consolidating it here, added in around 40. So this one looks, right, if it's going to continue putting in higher lows, this looks like it can go try to reclaim that high and potentially push higher. VLTO getting very, very tight here. Look at these 4 closes. They're basically just kissing each other, just going down very slightly, volume drying up, and then overall the pattern here is getting tighter too as well. So there's going to be a move to be made here in VLTO very, very soon. If it breaks to the upside, I'd be looking at 102.5 to potentially higher for a trend continuation. Look, Coca-Cola CCEP, not KO. This one's also getting pretty tight right over here too as well, with about 4 closes that are very, very close within each other. We've been seeing some decent ranges, but the closes are very, very tight right into that area. So I'd expect to see a nice move there. Google is a popular name, obviously, and Google has also been coiling up here very, very tightly, looking for a potential move up to the upside. Now remember, like I said, the S&P 500's could be potentially getting to that area where it has to digest, consolidate, get pinned at around 5,500. So that might put pressure on names like Google if the market comes off. However, perhaps, right, it might take other names that have been going up like Apple or Nvidia, and then it might try to look to rotate into these names that have been consolidating. So that'd be another thing to pay attention to. Philip Morris has also seen nice consolidations and nice run-ups. And the run-ups have been good on good volume. The consolidations have been on declining volume. The breakout was on better volume. Then it pulls in, kind of declining volume here. And we're right around that 20-day moving average with 3 closes that are very tight. So a break of this 102.5 could send us back up to 105 for a continuation of higher lows and higher highs there as well. GPS is one that's consolidating its earnings move, and that was a very bullish earnings gap. And price, as it's pulling back, you can see the 20 and the 50 started to cross over here, started to move up. So this is another name that looks like it's just consolidating its earning move for a potential break back up to retest that 30. Another one that looked great is Foot Locker, and we talked about that on the prior video. The last one I'll close off with here is AT&T, because trust me, I can keep going. There are a lot of different setups right now taking place that look like they're getting ready to really make moves. So it's just good practice to get these on your watch list, watch and see how they respond. Paper trade them. You don't need to use real money, right? And then see how they respond at a time where also the S&P 500 may get pinned in and around that 5,500. But AT&T also has 4 closes that are just right on the heels, just next to each other, and it's testing a prior breakout area. This breakout came on good volume, and it's been pulling back on declining volume here. So we're going to see here, is the AT&T start to see some strength and pick back up? If so, you can potentially play that back into this prior swing high, and even further if it wants to continue to make its move. If it starts obviously breaking down, right? The reason why I like tight areas is because if it breaks down, you know when to get out, right? And if it sets back up, you can obviously look to get back in. That's all I got for you on today's episode, everybody. We went through a lot of stocks, a lot of opportunities. We talked about the fear and greed index. We talked about how the S&P 500 could get pinned at and where it's at. I hope today's episode helped out. And if you're available when I live stream, make sure to tune in. I'm still trying to figure out a solid schedule so you're more aware when I go live. See you later.